If you've heard the phrase cash is king, you may have an insight into why the process of bank reconciliation is so important. Cash has been crowned supreme ruler because it is the most liquid asset in charge of satisfying the immediate obligations of the business kingdom in continuous transactions. Hence, the business records these transactions and keeps cash away in its palace, the bank. The bank provides the physical security desired to protect the asset and a second set of cash records known as the bank statement. So now we have two protectors recording the movement of king cash, company records and the bank statement. But what happens when one protector falls asleep at their post and fails to record a transaction or records a transaction wrong? Here arises a discrepancy in records where the bank's cash balance and company's cash balance are out of alignment. Thus, the knight in shining armour, Sir Bank Reconciliation, must be called upon to recognise these differences and reconcile them to the actual cash holdings of the business. This is so that the company's final book balance may be adjusted to reflect all transactions and the authentic liquidity of the business. First, he must adjust the bank balance to the actual cash account balance of the company, which has been misaligned by two main causes. The first is because cash deposits and payments often take time to clear the bank and are not recognised before the statement is recorded on a specific date. Cash deposits that are yet to appear in the bank are known as deposits in transit, and obligated cash payments that are yet to be withdrawn are known as outstanding cheques. Thus, the bank's cash statement must be reconciled by adding deposits and removing payments that have not been recognised as of the current statement date. Secondly, the bank statement needs reconciliation when the record keepers of King Cash erroneously record the amounts in transactions. Here, Sir Bank Reconciliation must add or subtract the relevant cash amount for the balance. This amount is however much the transaction has been overstated or understated. After this step, the adjusted bank balance should be identical to the statement's final reported statement of financial position. This is what the adjusted bank statement looks like once Sir Bank Reconciliation has rescued King Cash from its evil unrecorded deposits and payments. Next, Sir Bank Reconciliation must adjust the company's ledger account to the actual cash balance, which may be discrepant again for two main reasons. The first is when certain activities performed by the bank affect the company's cash holdings and have not been recorded by the company as of the current statement date. These activities include credit memoranda, which increase the company's balance, and debit memorandum, which decrease this balance. Credit memorandas occur when the bank collects cash for the business, often through receivables and notes, while debit memorandums occur when the bank imposes fees on the company or recognises a return cheque for insufficient funds. Hence, Sir Bank Reconciliation must add all the credit memoranda and subtract all the debit memorandum from the statement and to reconcile it. Secondly, erroneous recordings in company cash records also have a part in differentiating the statements, again by overstating and understating the volumes of cash and transactions. Here, Sir Bank Reconciliation must again add or subtract the relevant amounts to reflect the true holdings. Here's an example of an adjusted balance per company records. Note where the credit memoranda have been added and debit memorandum have been subtracted. Once the bank balance and the company's book balance are reconciled, the company's cash balance is adjusted to the actual cash balance that was found in the reconciliation. Hence, the third and final step for Sir Bank Reconciliation is to record all relevant journal entries that are required to adjust the company's book balance to the actual cash balance. These journal entries consist of credit and debit memorandum and any errors found in step 2. Now we see how our noble Sir Bank Reconciliation swoops in to save the day when company records and bank statements fall behind. With him, King Cash can be kept safe in his palace